Hello one and all. I welcome all of you to the today's session. I am Rupak Das, Assistant Professor, ICFAI Law School, Hyderabad. The topic for our today's discussion is Composition Levy Scheme under GST CGST Act 2017. The title for the topic is Efficient Compliance Navigating the Composition Levy under Goods and Service Tax. Taxation is a very important source of revenue for the government. Tax can be levied either by the central government or the state government. Why so? Because by virtue of Article 265 of the Indian Constitution, it is mandate that there should be no tax unless by the authority of law. For imposition of any kind of any taxes, it should be imposed with the help of a legislation being incorporated by the central or the state government. When you talk about GST, Constitution 101st Amendment Act plays a very important role. Constitution 101st Amendment Act that was enacted in 2016 that brought changes to the entire structure of indirect taxes in India. By virtue of Article 264A, the center and the state has got the power to impose taxes with regard to intrastate supplies, and by virtue of Article 269A and Article 264A Clause C of the Indian Constitution, the central government has got exclusive power to impose taxation on any kind of any interstate supplies. Now, when we are talking about composition levy, the question that comes to our mind is, what is the term actually? What is composition levy? Firstly, defining about levy. What is the concept of levy? Levy is nothing but the imposition of tax, as I told previously, by either the central government or the state government. The power is only vested with the legislatures, the concerned legislatures. What are the components of levy? I mean, when the tax is being imposed, how it is to be imposed, on whom it is to be imposed, on what incidences the taxes are going to be imposed, and what will be the rate of taxes. Hereby, we are specifically dealing with indirect taxes. That means taxes imposed on consumption of either goods or services. So, number one is the tax is to be imposed on a taxable person. Who is going to be considered as a taxable person? The person as per the CGST Act 2017 who is liable to get registered or is a already registered person. That person is going to be considered as a taxable person, and on the taxable person itself, the GST as per the composition levy scheme will be imposed. Number two, the question is when the tax is to be imposed. Because we are talking about indirect taxes, the tax will be imposed only when there is a supply of either any kind of any commodity or any services. So that event for taxation is supply. The act of supply must take place. Number three, talking about measure or the quantum. At what amount the tax will be imposed? The tax will be imposed on the value of the supply. Hereby, section 15 is being focused towards, and the amount of supply, or in other terms, as per section 15 of the CGST Act 2017, the value of supply is to be primarily determined. What is going to be the value of the supply of any kind of any goods or any kind of any services that is getting supplied? What is the value of that? And on that value only, the GST is to be imposed. Lastly, talking about at what rate, who is going to decide that? Accordingly, the central government or the state government, the concerned state governments, as per the recommendation of the GST Council, is going to determine the rates which is to be imposed on the taxable value the value of the supply, and thereby the GST is to be calculated. Now proceeding further, under CGST Act, within this ambit of GST, there are two kinds of levy. One is the forward charge levy and the other one is reverse charge mechanism or reverse charge levy. As we have already discussed previously, it is the taxable person on whom the tax is to be imposed. Now, with regard to forward charge levy, there are further two more classifications. Number one is the regular levy. Number two is the composition levy. With regard to regular charge levy or regular levy, as per section 9 of the CGST Act 2017, the tax is to be imposed on the supplier, the one who is actually supplying either the goods or the services. It means the burden to pay the taxes will be on the supplier, the one who is a registered person who is having a GST identification number, right? Any supplier of goods or maybe services. However, with regard to reverse charge mechanism, as per section 9 clause 3 and 9 clause 4 of the CGST Act, the burden will be on the recipient. That's another classification though, and maybe in the upcoming lectures we'll deal with this one. Today we are particularly focusing towards composition levy as per section 10, which is a part of forward charge mechanism. I guess as of now the concept of forward charge mechanism is clear. Hereby there are two entities, the supplier and the recipient. The supplier is the one who is selling it and receiving the money from the recipient. The recipient is the one who is going to be the ultimate consumer of the goods or services. Let me clarify one thing over here. With regard to indirect taxation, the ultimate bearer of the taxes, the ultimate person who is going to bear the taxes will be the end consumer, the one who is at the end of the day consuming the goods or the services. So now, as I have already told you, it is the seller who will be paying it. Then what is going to be the scenario? The scenario will be that the seller will be paying it to the government's treasury or the government's fund, but the seller will be collecting it from the end consumer. Now, we already know that there is a specific chart which consists of all the rates being given by the central government with regard to GST, whereby it starts from 0%, 5% and it goes up to 28%. The highest rate currently is 28%. That's the regular levy. One more scheme is there, whereby without any differentiation, the supplier need to pay a single percentage, a particular fixed percentage in other terms. That is known as composition levy. Let's learn about it. So section 10 is talking about composition levy under CGST Act 2017. Section 10 is stating that a registered person can opt, please focus over here, the term is opt, for payment of taxes under a scheme of composition. Why I told to focus on the term opt? The reason being, opt hereby refers that the mechanism is not mandatory. It is rather optional. Any supplier can voluntarily take it up. Now this composition levy is a scheme to ease the compliance. The purpose is that the compliance should be easier. More easier the compliance is, it is better for the policy to generate the revenue. Ultimately, the purpose of GST is to generate revenue for the government. If the compliance is very much hard, it is very much complex in nature, in that case, this is going to adversely impact the generation of revenue. To avoid any such scenario, the government has come up with this particular scheme known as composition levy. A registered person needs only to ascertain the aggregate value over here. This composition levy can be opted by anyone in this country. However, it is condition precedent. It means before the person is opting for this composition levy, the person must fulfill certain conditions. Section 10 of the CGST Act is the charging section relating to composition scheme. Rule 3 to Rule 7 of the CGST rule provides for the various rules relating to the imposition of composition levy. Now talking about the rate of taxes. What will be the rate? As of now, so far whatever we have discussed, it is clear that composition levy is different from regular levy. And the difference is majorly with regard to the rate at which the tax is being imposed. An eligible manufacturer, whoever is eligible under this particular scheme, has to pay taxes only at the rate of 1%. I believe the difference is clear to you. As per normal levy, the rate can be up to 28% depending on the nature of the commodities or the services. However, over here for a particular category of manufacturer of goods or commodities, it's going to be 1%. And out of this 1%, there will be an equal share of the central government as well as the state government or the concerned government of the union territory. Thereby, 0.5% of the tax collected will go to the fund of the central government and 0.5 will go to the concerned state or union territory. Now, this 1% will be of the aggregate turnover. All eligible service providers are going to pay a tax of 6%. And similarly, 3% will go to the state government, 3% will go to the central government. All eligible persons who are engaged in making supplies mentioned in clause B of para 6 of schedule 2 of the CGST Act, hereby we are referring to those who are engaged in hospitality service or hotel service or restaurant services. They have to pay a tax of 5%, and in a similar manner half the portion, that is 2.5%, will go to the fund of the state government and 2.5% will go to the fund of the central government. All other eligible suppliers who are engaged into supply of goods or services as a trader, they have to pay a tax at the rate of 1% of the taxable turnover in the concerned state or the union territory, as the case may be. Proceeding further, now the question comes, what is the major condition that I have already mentioned about? The condition is that your aggregate turnover must be below certain limit. What is that? For 8 states, 7 states of the Northeast, 7 sisters, and Uttarakhand, for those 8 states, the limit is 75 lakhs. And for the rest of the country, the limit is 1.5 crore. 1 crore 50 lakhs. The aggregate turnover must not exceed this threshold limit. If the aggregate turnover of the person concerned, the taxable person, is below such limit, in that case, the person can opt for composition levy scheme under section 10 of the CGST Act 2017. Now the question comes, what is this concept of aggregate turnover? What does it include and what it doesn't? The definition of aggregate turnover has been given under section 2 clause 6 of the CGST Act 2017, which means the aggregate value of all taxable supplies, excluding the value of inward supply in case of reverse charge mechanism, and it shall include all the value of exempted supply, export of goods or services or both. That means thereby you cannot show your expenses. The total value that you have earned in return of the supply need to be considered over here. And with regard to interstate supplies of a person having the same PAN number, all the supplies that has been done by such taxable person throughout the whole country will be considered in a cumulative form. That means all the supplies are going to be considered as part of his or her aggregate turnover. And only if such aggregate turnover is below the aforementioned limit, then only the person can opt for composition levy. Otherwise, the person mandatorily need to go for normal levy. Proceeding further, who cannot opt for composition scheme? Even if the amount is below the threshold limit, then too certain conditions are there which need to be fulfilled. And certain category of suppliers, they are not eligible to apply or to opt for composition levy scheme. They have to mandatorily go for the normal levy. Who are they? Number one, a casual taxable person. Casual taxable person basically refers to all those suppliers who are not belonging to any particular state, but they have come to a state for supplying their goods or services for a specific point of time. Maybe someone who is a trader from Rajasthan has come to Telangana for selling his commodities in an exhibition which will be held for 7 days. In that case, such a person will be considered as casual taxable person. Number two, a non-resident taxable person. Who are they? A person who occasionally undertakes supplies but has no fixed place of business or residence in India. Number three, a person engaged in providing interstate supply of goods or services. It is very important to note here that this composition levy is applicable only if the person is involved in intrastate supplies. That means the supply taking place within a particular state. If the person is involved in any kind of any interstate supply, that means the supply between two states whereby the supplier and the recipients are situated in two different states, in that case the person concerned, the registered person, is not allowed to opt for any kind of composition levy. The person need to mandatorily go for regular levy and fulfill the compliance thereby. Subsequently, a person engaged in supply of goods through any kind of any ECO. What is ECO? E-commerce operator like Amazon, Flipkart, Myntra and a lot others. They also need to opt for regular levy only. Lastly, a person engaged in manufacturing of goods notified under Section 10 Clause 2 of the CGST Act are also not allowed to opt for. Proceeding further, what are the benefits? What are the benefits of opting for this composition levy? The primary intention of the government to introduce such a scheme within the ambit of GST is that the compliance should be easier. Now that at this point of time we are living in this era of digitalization, it has already been observed that the easier is the compliance process, the better it is in the interest of revenue. Before 2016, all of us were aware that the structure of indirect taxes in India was quite different. This structure was comprising of state taxes as well as central taxes. But that was quite complex, because of which it was hampering the revenue generation. With an intention to avoid any such complexities and to make the compliance easier, GST was introduced, and additionally within this ambit of GST, composition levy has been introduced, whereby if the trader is fulfilling certain conditions, the person can opt for a very easy compliance, and this shall ultimately attract every registered person to pay the taxes within due time. Number two, no need to maintain book of accounts, issue invoices. It is very important to note here that the person concerned, that is the registered person, need not to issue, rather bill of supply is to be issued by the registered person who is supplying the goods or services. tax is levied at a very fixed rate on the turnover rather than taxing each supply separately. On the turnover, or in other terms, the aggregate turnover, the tax is to be supplied at a fixed rate. Whereas in normal levy, the taxation is being done separately considering each and every commodity, and a separate rate of tax is to be imposed. But as we have already discussed, the compliance is easier over here. Thereby, with regard to composition levy, the rate of taxes will be uniform, and there is high liquidity as well, as the taxpayer need not to worry about his suppliers filing return, as he cannot take the credit. Yes, with regard to composition levy, the rate of taxation is very less, and the concerned person is not eligible to get any kind of input tax credit. For claiming the ITC, it is mandatory that the supplier must have, it is mandatory that the one who has received the good must have filed the return. However, there is no such complexities with regard to composition levy. Proceeding further, there are certain limitations. What are those? Number one, for composition scheme, the territory of supply will be very much limited. Why so? Reason being, the person who is engaged in intrastate supply only are eligible to opt for composition levy. If anyone is dealing with interstate supply, in that case the person is not allowed to opt for composition. Thereby, your territory of transactions or supply is getting limited. Number two, as we have already discussed, there will be no ITC, input tax credit. Taxpayers registered under composition levy scheme will not be eligible to take input tax credit on any of the purchases. Because of that, they at times have to pay the taxes from their own pocket, though at a very lesser rate. Because over here, please note it, which is very important, that if a supplier is involved or has opted for composition levy, in that case the supplier cannot collect any kind of GST from the recipient. Taxpayers are not even allowed to issue tax invoices, rather the bill of supply is to be issued by the taxpayer. So from the next time, whenever you visit any supplier to purchase any kind of commodities or any services, please ensure whether the supplier has opted for composition levy or regular levy. In case the supplier has opted for composition levy, you are not liable to pay any kind of GST on the value of supply. That's all for today's session. In the upcoming lectures, we'll learn about more topics with regard to taxation in the form of direct taxation as well as indirect taxation. Thank you.